We have approximately 4 years. The CEO of Rigetti Computing recently stated that quantum advantage is about 4 years away. This means that quantum computing would be stable, cheaper, and extremely reliable. This is referred to as quantum dominance, when fault-tolerant quantum computers start to solve real commercial problems in drug discovery, materials science, and financial modeling that would take classical computers thousands of years to crack. And if that holds true, that means that we have 4 years to position ourselves before this market explodes even more. And for those of you that are new to my channel, I showcased the top quantum stocks over 2 years ago, where most of those pure play stocks are up several thousands of %. So if a person had invested $1,000 in D-Wave when I first spoke about it, it would be worth over $40,000 today. And because I do this level of research for my own portfolio, it's what allowed me to retire 5 years ago as a multimillionaire when I was still in my 40s. And it was after a great corporate career with companies like Amazon. I happen to have worked in tech, and that's why I tend to talk about them in my videos. Now, in laying down the size of the prize, experts are projecting quantum computing will become a $1 trillion sector within 10 years, with roughly $110 billion going to direct vendors like the ones that I'm going to speak about in today's video. I am about to show you the complete map, and I'll break down how that $110 billion impacts each of the company's stock prices based on their market caps. And I will also discuss ETF options for those of you that prefer the hands-off approach. And then, of course, at the end, I will show you exactly how I would invest $100 into all of these today. Now, to keep things simple, I'm going to break this down as a quantum trinity. First, the infrastructure layer. These are companies building the platforms, the cloud systems, and the middleware that quantum computing runs on, profiting whether the quantum arrives in 4 years or 14. Second, the pure play builders, the companies that are betting everything on quantum hardware. They're high risk, they're high reward, and this is where that $110 billion creates the biggest stock price leverage. Third, the penny dreamers. These are sub $10 stocks with billion-dollar ambitions, where a single breakthrough could 10x our money, or where a person could simply lose it all. So let's start at the base with the infrastructure layer. Now, these companies have already figured out how to make money from quantum, and they're doing it right now. We'll start with Nvidia, and this might be the most obvious quantum play that you're not paying attention to. Because here's what most people miss. Quantum computers, they don't replace GPUs. They actually multiply the need for them. Every quantum experiment requires massive classical computing for simulation, error correction, and control systems. And Nvidia is already selling this infrastructure, where they have QQuantum, their quantum simulation toolkit that accelerates circuit testing by 100x on their GPUs. Companies test quantum algorithms on Nvidia hardware before they ever touch a quantum processor. Next is CUDA-Q. This is the bridge layer. It lets developers write code once and run it across CPUs, GPUs, and multiple quantum processors. IonQ uses it, Quantinuum integrates it, Pascal builds on it. Nvidia is becoming the default programming layer for quantum. Next, we have DGX Quantum, and that pairs their Grace Hopper servers directly with quantum processors with under 4 microsecond latency. That happens to be fast enough to run real-time error correction while qubits are still in use. And here's the beautiful part. Whether quantum computers arrive in 4 years, or even if they get delayed up to 2035, Nvidia still wins. Every stage, design, simulation, error correction, post-processing, they all run on their GPUs. Nvidia doesn't even need to bet on quantum because they're selling the infrastructure that quantum can't exist without. And then we have Microsoft, which is playing a different game. They're building the marketplace. Azure Quantum is live right now, giving us access to IonQ, Quantinuum, Rigetti, and Pascal. But Microsoft isn't just renting qubits, they're selling the outcomes. And then there's error correction work. Microsoft and Quantinuum just demonstrated 800 times better logical error rates on real hardware. That's the reliability progress that turns quantum from research project to physical product. Plus, they're only one of only 2 companies that DARPA selected for utility-scale quantum validation. The US government is betting on Microsoft's roadmap. And then we have Google, which is the reliability leader, and they do have receipts. Their Willow chip achieved something no one else has: below threshold error correction. That means that their logical qubits actually get better as they scale them up. not worse. But here's Google's real play. Sandbox AQ. It's an Alphabet spinout that just raised $450 million with Google and Nvidia backing it up. Sandbox AQ sells post-quantum security and AI-driven simulation today, turning Google quantum research into immediate revenue. And this is how we're buying both the moonshot and the commercialization vehicle all in one stock. Next, we have Amazon, which doesn't really need to pick the winning side because they're already running the entire casino. AWS bracket already gives us access to 6 quantum providers. But Amazon's genius is in the economics, because every quantum job on bracket, it burns hundreds of hours of classical compute for both the pre-processing and the post-processing. Internal AWS data shows classical compute usage is roughly 500 times the quantum processor runtime per job. So even if quantum fails, AWS is building the infrastructure around it. Quantum happens to be a double win for hyperscalers like Amazon and Google. And as a little bit of a hint of what this means, Amazon just deployed the world's first GB300 supercluster, which is 4,600 Nvidia Blackwell GPUs connected on quantum-grade networking. That's the classical foundation every hybrid quantum workflow will run on. And that reiterates that traditional GPUs are going to amplify quantum computing. They're not going to replace it. As a quick reminder, I'm going to showcase kind of a rough forecast of the impact to the market cap for each of these companies. And then I'm also going to show how I think it's going to impact their stock price. Next is IBM. The company everyone forgets is still a quantum standard bearer. IBM isn't just building quantum computers, they're building the operating system that everyone else runs on. Their Quantum System 2 houses 133-qubit Heron processors in modular racks that can scale up. They've demonstrated real error correction, the first scalable proof that logical qubits can actually work. But here's IBM's real advantage: QuizKit. It's the open source programming framework that over 450,000 developers use today. AWS integrates it, Azure supports it, IonQ builds on it. IBM wrote the language of quantum computing before anyone else even knew the alphabet. They're also selling quantum as a service right now, with over 500 corporate clients on IBM Quantum Cloud. And when you see headlines about quantum breakthroughs, journalists still benchmark everything against IBM systems. They set the standard that everyone else has to beat. So that's the infrastructure layer. Nvidia sells the GPUs and the software. Microsoft, Amazon, and Google broker the cloud access. And IBM built the entire system, and they wrote the programming language. These 5 companies profit from quantum infrastructure, whether quantum computers work on schedule or even if they get delayed a few years, because they're selling to each other, to governments, to enterprises, and revenue is already flowing for them today. But of course, someone still has to build the breakthrough quantum hardware. That's where that second layer gets interesting, and where the real leverage begins to hit our investments. A key aspect of quantum computing is that it's a technology arms race where security and defense will be necessary. And in thinking of defense, something so simple as airport security needs a major overhaul. That's where today's sponsor, Liberty Defense Holdings, is a shining star. As a leader in next-generation walk-through threat detection focused on commercializing security solutions derived from key U.S. government partnerships, their technology is exclusively licensed from institutions like MIT Lincoln Laboratory and the Pacific Northwest National Laboratory. And here's why this company is worth a deeper dive. The first point is detection of non-metallic threats. Their flagship HexWave system utilizes millimeter wave technology and AI to detect both metallic and non-metallic concealed threats. This is crucial for addressing modern security risks like 3D printed ghost guns and plastic explosives that conventional metal detectors often miss. HexWave also provides high throughput, screening a lot of people quickly without requiring them to take off a lot of clothing or shoes. And the second point is TSA mandates and sole source contracts. There's a mandate requiring 100% screening of airport employees for explosive threats by April 2026. U.S. airports began deploying HexWave in 2024 to satisfy this mandate. Furthermore, TSA granted Liberty Defense a sole source contract and approximately $6 million in grants for the HD AIT upgrade kit. This kit updates existing AIT systems that we already see in airports today, and this addresses a potential $100 million retrofit market opportunity. And that's important to call out, because Liberty Defense only has a market cap of about $16 million in US dollars. If awarded this $100 million retrofit, It could theoretically 10x the stock price overnight. And my final point is low valuation position. Liberty Defense shares are trading near their all-time lows, even after the company raised $45 million for product development and commercialization efforts. If you'd like to learn more about Liberty Defense Holdings, check out the link down in the description. These next three companies are all in. They are not diversified like the infrastructure layer. Quantum is their only business. And that means if they hit, you're looking at a 10x, 20x, maybe even a 50x return. But of course, if they miss, then we stand to lose all of our money in them. This is where that $1 trillion market gets real interesting. Let's start with IonQ. And honestly, this is the one that everyone is talking about. And with good reason, since they are up 63% year to date, and because they're the only quantum company that you can access on both AWS Bracket and Azure Quantum, where their Forte Enterprise system is rack mountable and shipping to real customers right now. But look, anyone can ship hardware. Now here's what really matters. June of 2025, IonQ partnered with AstraZeneca, AWS, and Nvidia and got a 20x speed up on an actual drug chemistry problem. Like, this wasn't a demo. It's not science experiments. This is a real pharmaceutical workflow that went from hours to minutes. September 2025, they hit AQ64 on their Tempo system. That's their performance benchmark, and right now it's the highest in the industry. And the money is flowing in. Q2 revenue was $20.7 million, and they're guiding $82 to $100 million for the full year. Here's why IonQ stands out. Trapped ion qubits. These things have all-to-all connectivity, long coherence times, and high gate fidelities. Okay, now I'll say it in English. They have fewer errors, less overhead, and better performance. And of course, they're not just selling cloud access. Chattanooga's electric utility is installing an IonQ system in early 2026 to optimize their power grid with Oak Ridge National Lab. That's a real paying customer running production workloads today. If quantum dominance happens in 4 years, IonQ is positioned to be the TSMC of quantum computing. Next, we have Rigetti. This is the comeback story with some serious government backing. They are doing something different. Instead of building bigger and bigger single chips, they're pioneering chiplet architecture, basically stitching smaller quantum processors together into modular systems that can scale. July 2025, they showed off the industry's largest multi-chip quantum system. Their Anka 3 chip hits 99.5% 2-qubit fidelity. Now, that's the kind of reliability that you need for error correction to actually work. But here's where it gets interesting. The government is betting big on Rigetti. DARPA selected Rigetti for their quantum benchmarking initiative to build utility-scale systems by 2033. Then the Air Force gave them $5.8 million over 3 years to build a hybrid quantum optical network node. And of course, the UK threw in £3.5 million for error correction research. Once again, this isn't hype money. This is true validation that the process is working. They're also live on AWS Bracket, and Amazon just rolled out a feature that makes Rigetti systems run 24 times faster. Here's Rigetti's edge. They own Fab 1, their own quantum chip fabrication facility. They control the entire stack. They've got design, manufacturing, and the deployment. And if their chiplet architecture works, they become the modular platform that everyone else builds on. Now on to D-Wave, the company doing something completely different than the others. They're not waiting for fault-tolerant quantum computers. They're making money today solving optimization problems with quantum annealing, logistics scheduling, portfolio optimization, problems that companies actually have right now. Their Advantage 2 system went live in 2025 with better performance, lower energy, new topology. The customers are really buying into it, and the revenue begins to really back it up. Q2 revenue was at $3.1 million, and that happened to be up 41% year over year. And in the first half, $18.1 million, up 289%. And some of you will notice that's very lumpy, and that's because system sales create a lot of spikes. But these are paying customers. In addition, they're on AWS Bracket. They signed a government contract through Carasoft that puts them on NASA procurement vehicles. And they partnered with Deloitte Canada to sell into enterprise. Here's the play for D-Wave. Optimization is a $50+ billion market today. And their hybrid solvers are smart. Classical pre-processing, quantum for the hard stuff, and classical post-processing. Everything we mentioned before. The whole workflow builds out cloud compute time, whether the quantum part works perfectly or not. D-Wave is one of the few quantum companies where if you ask them to show you the money, they actually have an answer. All right, now we're going to shift into the Wild West, the penny stocks. Look, I am not going to sugarcoat it. Most of these companies are burning cash faster than they're making it. The dilution is real and the execution risk is massive. But if a person sizes these right, and I mean small positions, the upside could be ridiculous. I mean, we're talking 20x, 50x, maybe even 100 times if they hit. So let's see what they're actually building. First up is quantum computing with QUBT. Here's their play: photonic quantum computing using thin film lithium niobate chips. That means room temperature, low power, none of those crazy cryogenic requirements superconducting qubits need for everyone else. They are building a quantum photonics foundry in Tempe, Arizona, and they've got purchase orders for their foundry platform already. If photonics proves out as a scalable quantum computing approach, then QUBT becomes a strategic acquisition target for the likes of Intel, Nvidia, or someone in that tier. I mean, the foundry alone could be worth billions if they can execute. Analysts show it as a moderate buy with over 30% upside in the next 12 months. Next is SEALSQ with the ticker LAES. This is a unique post-quantum cryptography play. They're not building quantum computers. In fact, they're building the chips that protect us from quantum computers breaking all of our encryption. Just think about it. Every Internet of Things device, every electric vehicle, every secure chip, it's going to need an upgrade when quantum threatens current encryption. There are potential mandates that may become mandatory in 2027, and suddenly billions of devices are going to need security upgrades. And SEALSQ is one of the few companies with validated hardware that's ready to ship. If those mandates hit and they land OEM contracts, then automotive or Internet of Things manufacturers, you're looking at a 30x to 80x upside, and this becomes a critical infrastructure play overnight. Now here's the catch. All the big semiconductor companies are entering this space. So SEALSQ has to move fast and they need to lock in customers before the giants really begin to crush them with scale. The next penny stock is Aquit with the ticker ARQQ. And they're another post-quantum security play, but they are software focused. They're selling quantum safe encryption platforms, network secure SKA edge controller to protect communication networks against future quantum attacks. Here's the upside. If they land one major telecom or government contract, we're talking a tier 1 carrier, then deploying their encryption stack, the stock could 10x or 20x overnight. Like the others, the risk is obvious. They're burning cash a lot faster than they're making revenue, and they could go to zero if they can't land contracts soon. But as a small position, well, the asymmetry could be wild. And the last one before I cover the stock impacts at the end is Mcloud Hologram with the ticker HOLO. And honestly, this is the wildest one. They happen to be a mix of everything: holographic tech, quantum simulation, AR, blockchain, and they've got $394 million in cash, which is pretty rare for a penny stock. Now on the quantum side, they claim that their DeepSeek model cuts quantum simulations compute by 50%. They're doing heavy hole spin qubit research and saying they're hitting 99% fidelity in experiments. So here's the play. If their DeepSeek simulation optimization is real, and if it gets adopted by quantum research teams, this becomes a software licensing story. If their qubit research pans out, they could pivot into hardware. But here's the problem. Almost everything that they announce is in press releases. None of it's peer-reviewed papers. The credibility gap is kind of huge, but they've got cash to burn and they're swinging at multiple pitches. Many people are probably treating this like a lottery ticket. If any of the quantum bets hit, then hey, yeah, you could see 5x to 10x. But this could also bleed cash for years on a multi-vertical strategy that never really focuses in on a real product. Now, if picking individual quantum stocks feels a little like too much work or too much risk, then there is another option, and that's QTUM, or the Defiance Quantum ETF. This gives you exposure to the entire quantum sector on one ticker. It's got like 77 companies all in one trade. But before you think this is just the safe, boring option, let me show you what you're actually giving up. Look at that gap. IonQ has nearly doubled QTUM's returns. Why? Because QTUM only holds 5.1% in IonQ. So when IonQ doubles, QTUM only gets that 5% boost from that particular holding. The other 95% of the fund, which includes companies that didn't perform nearly as well, they just bring down the total return. That's diversification working exactly as designed. You give up the massive wins to avoid the massive losses. Because when IonQ was down 30% earlier this year, QTM was only down about 8%. You get smoothed out returns in both directions. And then of course there's the expense ratio of a 0.4%. So for every $10,000 that you invest, you're paying $40 a year in fees. You're essentially paying for automatic rebalancing and the risk management. Now, let me just show you what you're actually buying. So if you invest $100 in QTUM, less than $6 goes to IonQ, the stock that's up over 60% this year. The rest is spread across 77 other companies, many of which haven't moved hardly at all. So there you have it. You get 31.7% returns without picking winners versus 100+% returns if you pick the right one. Lower risk versus higher reward. Then again, 31% is still outpacing the S&P 500. Now let's get to what everybody actually cares about. What does that $110 billion in quantum market mean for each of these stocks? Let's run the math. Let's start with the infrastructure layer. These 5 companies will split $70 billion in quantum revenue by 2035. Once again, this is my speculation. But remember, quantum is just one part of these businesses. These companies are growing from AI, cloud, enterprise software, regardless of how quantum does. Nobody can predict the future, but this is merely directional. Nvidia is going to more than double from AI and data center growth alone, from roughly $3 trillion to $7.5 trillion. Quantum adds another 300 to 400 billion on top of that baseline because the market cap is always several multipliers of that true revenue. That's an extra 9% boost just from quantum. And at Nvidia's scale, I think that's pretty massive. Microsoft doubles from Azure and enterprise AI from 3 trillion to 6 trillion as a baseline. Quantum adds another 200 to 300 billion, and that's an extra 6% market cap boost. Amazon more than doubles from AWS and e-commerce expansion. Quantum infrastructure adds roughly 200 to 300 billion. Then we have Google, which doubles from search, cloud, and YouTube, and their quantum moonshots and Sandbox AQ adds 100 to 200 billion, so roughly 5% extra. IBM grows modestly from hybrid cloud and consulting from 215 billion to 280 to roughly 350 billion as a baseline. But quantum is more significant for them proportionally, adding 15 to 20 billion to their market cap, or an extra 7%. As I said, these are not quantum stocks. They're AI and cloud stocks where quantum is just a strategic add-on. It's a few percentage points of upside on top of their core business. As a baseline scenario, our $70 becomes $105 to $135 just from the AI and cloud alone. That's 75 to 125% returns, which in my mind is a little conservative. But when you add on that quantum premium, that $70 becomes $112 to $143, and that's 87 to 138% returns. And as I said, this is merely directional. A lot is going to change in 10 years, and this is of course laughable, but in my mind, it's a good gut check. Now for the pure plays. This is where quantum is the entire business. These 3 companies will split that $25 billion in quantum revenue by 2035. So that's 25 to 30% of the vendor market. Feel free to go ahead and pause it on the screen, but I'm just going to walk through IonQ. And that happens to go from 100 million in revenue today to 11 to 15 billion by 2035. That's a 140x revenue growth. So from a $6 billion market cap today, that winds up being a 27 to 48x return. And when you look at Rigetti's numbers, it looks to be a 58 to 111x return. And then on to D-Wave, which looks like they could possibly have a 39 to 70x return. But of course, here's our reality check. These are all in bets on quantum. If quantum gets delayed by 5 years, these stocks could then be cut in half. And of course, if one company's technology proves inferior, that stock could go directly to zero. I just want to point out that these are extremely high risk, and I want to emphasize that. So for me, if I invested $25 into this layer, the conservative scenario looks to be about a 4 to 6.5x return. And then of course, there is the breakthrough scenario, which could turn that into a 27 to 70x return. And that of course is how asymmetry works. And then finally, the penny stocks. These companies will fight for about $5 to $11 billion worth of that specialty market. These in my mind are more like lottery tickets. And I'll start with QUBT. If photonic quantum computing becomes the winning architecture, they've got the foundry, and that's a potential of 9 to 36x. And then LAES. If post-quantum cryptography mandates hit by 2027 like expected, then suddenly every Internet of Thing device needs their chips. So once again, they get about a 13 to 50x potential. Then we have ARQQ. If quantum threats become real, then companies are going to be racing to try to safeguard themselves, where this could easily 10x overnight. And the last one is hollow. If their quantum simulation claims are real, there is about a 2 to 12x upside. But compared to all the others, is this one really even worth the risk? So in being very real about this, many of these companies are probably going to fail, or they're going to get acquired from big tech. Now, for my money, if I was going to invest $5 into this layer, the realistic scenario would be probably a $15 to $25 return. But then, of course, there's always the moonshot where it could turn into $90 to $360. So mapping it all out, here's how I would invest that $100 in quantum today. And I am not all talk. If you subscribe to my free newsletter, then you can see that I share my entire portfolio, and you can also see where I'm actually putting my money. So I'd put 70% into the infrastructure, 25% into the pure play builders, and maybe 5% into those penny stocks. Okay, let me say that again with all of it wrapped up. Conservative case, my $100 becomes $250, maybe $370, about a 10 to 14% annual return. That's very solid and very realistic. But as a breakthrough case, then that $100 becomes $1,000 to maybe $2,600. And I need to restate the fact that this is not me giving you advice. This is all speculation on my part. It's more of my gut check that's based on the information today. So as you can see by my allocation, I'm not betting on who wins. I'm really positioning for every outcome. And this has consistently been my way of asymmetrical investing for several years now. I don't go heavy into speculation. I ground myself into the sure payoff, and then I invest a little bit more into the risk in a very smart way. So that's my complete quantum playbook. $1 trillion in economic value by 2035, $110 billion captured by those direct vendors. So $100 can turn into $250 to well over $2,600, depending on how fast quantum arrives. Because there's no doubt about it, the $1 trillion quantum market is coming. And I started talking about this over 2 years ago. The only real question is, are we positioned to make the most of it? As always, thank you so much for watching.